Coach Mark from Tackle Trading, and it is my honor to bring you another video in the Decoding Buffett series. In this video, we are going to discuss margin of safety. Now, margin of safety fits within this larger moat we're discussing to protect ourselves. That concept of moat, protecting the castle. Well, we are going to dive into margin of safety, which involves investing below the intrinsic value of a company to minimize risk. The birth of margin of safety begins with the origins of Benjamin Graham, who laid down the foundation of value investing. His most pivotal concept, the margin of safety, was a beacon that guided Warren Buffett, his most renowned and famous disciple, towards unparalleled success. So this concept of margin of safety originates with Benjamin Graham, but was certainly emphasized and practiced by Warren Buffett throughout his investing career. So what exactly is this pivotal margin of safety concept all about? Essentially, what margin of safety is all about is that you're going to have the intrinsic value of a company, what the company is worth, and then you're going to have the price of the company, what the company is trading at on the stock market. And we are looking for a buffer between those two numbers. We want something to help protect us against uncertainty and risk and the unknown and all of the things that can occur in the future. We identify this great company. We know we're going to buy it. We're just looking for a price that gives us a little bit of a buffer against the unknown. For example, I hate shoveling snow. I hate it with a mortal passion. And I'm not just a value guy in my investing, I'm a value guy in life. I know I am going to make the occasional purchase of a snowblower. It's going to happen 100% guaranteed. Kind of like when I see an awesome company, I know I'm going to buy that company as well. Well, I am not going to buy that snowblower while the snow is falling and the demand is high and I'm not getting any deal. I'm going to wait for an opportunity to make that purchase. Now, I know I'm going to make the purchase. I'm just going to be very careful in when I make that purchase in order to, well, save a few dollars, in order to protect myself from full retail price. That is kind of what we're doing when we identify a stock that we deem to be an amazing company. We are looking for a price that offers us a discount, that offers us a deal, and then we pull the trigger. It's important to drive home this concept and how important it is in decoding Buffett and understanding his success in the markets. It's not just about finding a deal. Everyone on the surface can say, yeah, I want to find a deal, of course. No, margin of safety is central. It is the bedrock of Buffett's success. In fact, he has said the three most important words in investing are margin and safety. Think about that. The three most important words are margin of safety. Margin of safety is central to Buffett's philosophy, his conservative approach to investing that has produced outstanding results over the decades. What margin of safety really is all about is protecting ourselves, from uncertainty, from worries, because we're not just finding a great company and we're not just finding a great price for that company. We want to be so sure about those two facts that when nasty headlines hit, when nasty worries hit, when people are talking recession, when people are talking end of the world, we know that we got a great company at a great price. We don't have to worry, is it going to go down? Is it going to go up? We know it's going up over time. We know that it's going left to right on the chart over time. And so these headlines don't overcome ourselves. We know the company is a great company. We know we got in at a great price, and we don't have to worry about all this nonsense because we did our work at the very start. That's why margin of safety are the three most important words, according to Warren Buffett. There's a powerful analogy Warren Buffett uses to illustrate this concept. When you build a bridge, insist it can carry 30,000 pounds, but you only drive 10,000-pound trucks across it. That's what we're out there trying to do. We're trying to find $30 stocks that we only pay $10 for. Margin of safety, three most important words, according to Warren Buffett. Now let's get into the nuts and bolts of margin of safety. There's a little challenge in application because as we delve deeper into margin of safety, it's clear that applying it, there's a little more art than science here. There's not one universal blueprint. There's not one universal formula. And investors' judgment, skill set, and adaptability is going to be very important here. Having a personalized investment approach and embracing adaptability and your own judgment is going to be critical. In Decoding Buffett, let's go to Charlie Munger here for a second, because it's very important for you as an investor to develop the skills of an investor. There is not an out-of-the-box formula here that you're going to be able to use the rest of your life. You're going to need to become a good investor. Investing as a craft is one that is honed over time. Charlie Munger said there's no one easy method that can be simply mechanically applied. I don't think you can become a great investor rapidly. So there isn't one out-of-the-box magical formula that is going to make you a successful investor. But Buffett provides a blueprint in how you can get there. And at the core of that blueprint involves the concept of circle of competence. Now, people think they have a great deal of knowledge encompassing a lot of areas. People think that they have a lot of knowledge on politics and the economy and various different companies. But circle of competence is emphasized by Buffett and Munger to focus on what you actually know. It can be really difficult in the moment to look within and truly separate what we think we know from what we know. It's why surrounding yourself with like-minded individuals can be such a beneficial part of the equation, where you can bounce ideas, exchange theories, and get to the center of your circle of confidence and correctly identify what you actually know. So in our journey to discover what we actually know, Buffett and Munger have some great advice to help us speed along that journey. Keep it simple. Focus on the easy. Shy away from the too difficult and too hard. By embracing the easy and understandable and shying away from the too hard, we are going to rapidly increase our journey to success. Charlie Munger had a great quote on this. We have no system for estimating the correct value of all businesses. We put almost all, and I want to emphasize that, we put almost all. This is Charlie Munger, Warren Buffett. All of the ideas, all of the concept, all of the businesses that cross their desk, we put almost all in the too hard pile. And then we sift through a few easy ones. Master the art of saying no. It seems so simple, right? But it is foundational to your investing journey. Learn to say no. Learn to say, I don't quite understand this industry at an expert level. Learn to say, this is too hard. Let's go put that in the too hard pile. These are not negative attributes. They're testaments to your own discipline and foresight. Be selective in your process. Be selective with your time. Reduce the complexity. Learn to say no. In Decoding Buffett, he lays forth a solid foundation for us to become a successful investor. But we're still going to have to dive into some fundamental metrics so we can assign a value to the company. In our next video, we'll explore the art of valuation, focusing on ensuring that the price you pay for an asset includes a sufficient margin of safety. The metrics that we'll focus on amongst many will be PE ratio, price to book ratio, PEG ratio, free cash flow, return on equity, and dividend yield. I've truly enjoyed bringing you this video. Help us out, spread the good word. Like, share, subscribe, and we'll dive into those fundamental metrics in the next video.